Welcome to the channel, guys. My name is Jess. So Bitcoin has recently seen another massive correction in the last 24 hours, dropping 6%. The cryptocurrency market is currently on its last leg of support before we can confidently say that we should see another move back down to 55,000. So let's dive into the charts today to talk about what we need to see on the macro charts, the key levels, the structures, and what they mean, as well as what we need to see on the shorter time frame to signal some more bullish confidence. Before we get into all that though, make sure you guys like and subscribe to the channel down below to get regular Bitcoin analysis every Monday, Wednesday, and Saturday, and ring that notification button so you never miss an episode. If you're after even more content, be sure to check out my free Telegram channel for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trade setups with exact entry points, targets, and stop losses. Alrighty guys, as per usual, before we dive into our analysis, let's go ahead and talk about what on earth has happened in the last couple of days so we get some context for, the upcoming analysis. So you guys probably know this, but on, I think, Monday morning, we had a range high retest over here at $70,000. And after failing to break above the upper trend line of our macro bear bull flag structure or descending channel structure, we had a massive correction. So that correction has continued to where we are currently. If we take a look at the shorter time frame charts, we can see that essentially what happened was after losing our short time frame uptrend, we moved to retest our sell side liquidity level after failing to break above the 50 EMA over here on the 4-hour time frame and above that next key resistance that we had of $65,000. We saw another correction falling back again below 63k support and on to move past sell side liquidity and fill this gap in the volume profile over here. So it's now sitting at around $61,000 and our next key level of support is all the way down here at 60k, right? It is our macro level of support. We have a lot of, psychological support there, prior pi cycle high, and it was also, we can see on these high time frame charts historically or previously a really strong level of support here. You guys can see all those bounces there. We know it is a level of significance. So it has been an absolutely brutal 24 hours. Liquidations are through the roof. We've had $250 million in long liquidations in the last 24 hours alone. And S&P 500 is also down as well. So a lot of this is due to a couple of reasons. Obviously, the economy. The interest rate information that came out a couple of days ago wasn't necessarily bearish, but we've also had rising political tensions. I'm sure you guys all know about what's happening in the Middle East. And so we know that what's happening right now with Bitcoin isn't just industry specific. It's not the same as, what happened over here in that rejection from the second retest of $72,000 where we had Mt. Gox and we had... what else? Germany selling all of that Bitcoin that took us all the way down to 53,000. This is a little bit different. So we know that this isn't just industry specific. We know that the entire asset market is experiencing the downside or the negative effects of, those rising political tensions. So S&P 500 isn't looking great at all, guys. If we take a look, we are retesting the prior weekly high here, right? And if we fall below this level, it would mean that S&P 500 is in a downtrend for the first time in October 2023. So that wouldn't be good at all, and it definitely would not be good for Bitcoin. It is not a good sign. So let's go ahead and dive into Bitcoin. Let's talk about, first of all, our macro analysis and the really key levels that we have here as we approach this next segment of price action. Before we jump into that analysis, so guys, let's hear a quick word from our sponsor, BTC, where you can get 15% off all of your trading fees and up to $5,500 in sign-up rewards if you create an account using the link down below in my bio. BTC is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. Alrighty guys, so diving right into our macro analysis. Let me really quickly recap what I spoke about in my last video because it has a lot of significance here. So in that last video, there were two key things that we talked about on this chart that held a lot of significance. That first one being the 50-day moving average, this red line that we can see here, that 50-day moving average, and that 63k support, also the midline of the channel, so that blue dotted line, okay, which kind of coincided with that 63k support. Now, the reason why those two, levels or those 2 indicators, whatever you want to call them, were so important was because generally, when we're above the 50-day moving average, we see a range high retest. Okay, so generally above that, we're going to see, you know, a vague sort of uptrend. We have a much higher likelihood of seeing this $72,000 or $70,000 and a breakout, right? That bullish case scenario. Same thing with the midline, okay, and that $63,000 level. We can see 63 here acts as some sort of trigger point. We move above 63, range high retest. Move above 63, range high retest. Break down from 63, range low retest, okay? So right now, what we can see is that over the last couple of days, we've seen a breakdown of our 50-day moving average and 63K, and we've fallen below that blue dotted trend line, okay? So we're below the midline, we're below the 50-day moving average, and we're below our key, like, bullish level of support, okay? So that tells us straight away that we have a pretty high probability here of getting that range low retest instead, okay? Seeing that bearish case scenario and that move on the short time frame to 55K, all right? This next level, this is the base of our huge structural pattern, okay? We also talked about in the last video, if we move over onto a different Bitcoin chart, onto a 3-day chart and pull up Ichimoku, we also talked about the importance of our baseline here, this red line over here. And generally what we see when we move below the baseline is a retest of our leading span A. We don't always see it, and I'll make that distinction in just a moment, but generally, when we move below our baseline, we do have a higher probability of seeing that retest of our leading span A. And where that leading span A correlates is that range low, right? That 55, 56K level, depends on where it tests the trend line, but that sort of general level, okay? This 55K range, all right? So we know that, you know, again, from this Ichimoku indicator, we have another segment of confirmation that we should be seeing that next leg downwards on this shorter time frame. Now that brings us to talk about the distinction between these areas here where we had a breakdown from baseline, but we did not have the full measured move. What was the difference? Why did we bounce earlier than expected, and why did we not go down to test the leading span A? Well, I could sum it up by basically saying that indicators alone are not enough, right? Ichimoku alone is not enough. RSI alone is not enough. Moving averages alone are not enough. We have to use them in conjunction. We have to take all the information that we can possibly have. And this is not me grasping at straws to try and convince you that Bitcoin's bullish. I'm never just bullish or bearish. I'm just doing analysis and I'm telling you what the high probability situation is, right? So even though we've lost all these things, and even though the baseline has been broken down, moving average has been broken down, why do we have this last leg of support? And so what we're talking about now is the structure that we have. Okay, so over there in May, and in January 2024, why did we see those breakdowns but not a full measured move? If we go ahead and take a look at our structural chart on the daily time frame, we can see those breakdowns over here. We broke down from the baseline and we moved to test the structural support. We had our bull market uptrend at that time, okay? Over here in May, we had a breakdown from our baseline, but we had a retest of our structural support, which was our descending channel formation, and that is when we saw the bounce. So in both those scenarios, we did not have the full measured move to what would be this time the range low. And what we can see right now is Bitcoin is again retesting a structural level of support. We have our bull market uptrend, okay, which is acting as a level of support right now. And we also have what's even more significant than that is our 200-day moving average. The 200-day moving average has historically been really close to the bull market uptrend. It does a really good representation of, you know, the general macro uptrend. So when we're above the 200-day moving average, we are generally in an uptrend. Even if, you know, we have little segments where we lose it. Over here we did lose it, and we bounced on the leading span A. So again, using everything in conjunction. Aside from that, generally, when we're above the 200-day moving average, we are in an uptrend. And what we're seeing right now is a retest of that 200-day moving average as a base of support. So we have structural support right now, our bull market uptrend. We have our higher time frame moving average support. Right, we can see over here historically, when we broke above the 200-day moving average, first of all, is when we started to form that bull market uptrend. And over here from January 2023 to middle of that year, when we were doing that last little leg of accumulation before the start of, you know, this parabolic behavior we had over here, we moved above the 200-day moving average before forming that 6-month long uptrend. So it's a really, really important indicator, guys. We can go further back in history and talk about the 200-day moving average representing the dead cat bounce level of resistance, right? That $48,000 that ended up becoming such a huge level of resistance that breaking above it, we had our trigger for the parabolic price action that we saw this cycle, right? The dead cat bounce level. And it's so on board. I'm not going to keep going because it's going to take minutes and minutes and I don't want to waste your time. But we know the 200-day moving average is an important level to hold. So we're testing that right now. If we go over into our 3-day chart once again and pull up the Gaussian channel, we can see that we are also testing the midline of our Gaussian channel, which again has historically acted as a really strong level of support. We can see these retests over here. Breaking below the Gaussian channel low, that is when we generally see a retest of the base. Breaking below the midline, sorry, is generally when we see a test of the base of the Gaussian channel, right? Example over here. We have an example over here. We moved below the Gaussian channel. We failed to sustain above the base. We bounced on the weekly baseline on the Ichimoku though over here, which is why we saw a short time frame move back upwards. Dead cat bounce level, but rejected from the midline. Again, another representation of how important these indicators are and how well they do at representing key levels. So we can see over here, more confirmation that we are at a level of support. We're on that midline. Falling below the midline, we have more confirmation once again that we have a very high probability of seeing that move downwards to 55,000, this next bearish segment on the short time frame, and seeing that range low retest. What all of this analysis also tells us though, guys, is that if we fall below the midline and we fall below the 200-day moving average, the bull market uptrend, and we move towards that range low in the macro structural pattern, that descending channel, and to $55,000, we have a lot of support here, right? We know that it is the base of our Gaussian channel, it is the base of our Ichimoku cloud or that leading span A, and it is the base of our structural pattern. So moving towards $55,000, we have a lot of support. Right, so that means that while we're above this structure and while we're within this, somewhat bullish pattern, right, it is somewhat a bull flag, we do have, a potential to, I know it's hard to hear, see another bounce and another move back upwards, right? Obviously at that point in time, we need to see the bounce for any sort of confirmation of that. I'm not saying that the moment we approach that, we're definitely going to bounce. We need to look at the price action at that period of time. But if we do not bounce, that is when we enter a macro bear market, because falling though below that Gaussian channel on the 3-day time frame has historically represented, the start of that bear market here. We can see that over here, and throughout this entire period of accumulation, we have generally been above or within that Gaussian channel, okay? So it tells us that we're seeing a macro shift in the narrative, and we should very likely then enter a macro bear market. If we fall below 55,000, particularly if we move over onto the daily chart over here, sorry about all the drawings, this bearish trigger here, the horizontal trigger, that sell side liquidity level at 53,400, that is when we know that we are very likely to then enter that macro bear market. If we move over onto the Ichimoku cloud on the weekly time frame, we get a little bit more confirmation of where we might be headed in that first macro leg downwards. So if we take a look, we will have lost the baseline there. That's the base of our macro structure at $55,000. Coincides perfectly with the weekly baseline. But what we'll do is move on to test the Ichimoku cloud as a base of support there. So falling below that bearish trigger, that $53,400 level over here, this black line falling into the cloud, we go on to test the leading span A on the weekly time frame. So that next move downwards would take us to around 50,000. So 49, the exact price of the red line is 49,100. We know there is a lot of level of support there. We have this $55,000 range. We have $48,000 just below it. So it really coincides very well with that price action and these horizontal levels of support that we have here. So in that macro bearish trajectory, in the loss of our structural pattern, that will be that first leg downwards. Now, naturally, that macro bearish trajectory is the absolute worst case scenario. As of right now, support is support until it's not. We still have a potential to bounce. So let's talk about what we need to see on the shorter time frame to give us a little bit more bullish confidence and show us that, the buyers are stepping back in and taking back control of that shorter time frame narrative. And, we are likely to see that retest of $70,000 once again. So staying on this daily chart here for just a moment, the first thing that we need to see reclaimed is our $63,000 level of support. All right, we know that it is significant. So those exact same things that we kind of lost in this recent leg downwards of price action is exactly what we need to reclaim to show us that we have a little bit more strength. So that means a move above our 50-day moving average on the daily chart. So a close above that and a close above this $63,000 level of support on the daily time frame. We want to see that we've established it as a base of support. So that would tell us that, you know, this move here isn't having long-term impacts on the price action, and it's not forcing the price downwards anymore. We're going to see that leg back upwards towards $70,000. On the very short time frame, on the 4-hour chart, very similar. So, you know, that first level of resistance is going to be this price sell side liquidity level here at 62,300. Moving above that, we will see very likely, hopefully, a bounce to attempt to reestablish 63 as a base of support. If we hold that on the daily time frame, then we will see that next leg upwards. And in that move on the short time frame, what we really want to do is move above the 50 EMA here on the 4-hour time frame. And the reason why that is so important is generally because the way the price has reacted to it as a base of resistance in the past, in this more recent segment of price action. So we want to see that level, that moving average reclaimed, so that we are once again traveling in a shorter time frame uptrend, and we can see those moves throughout those next little levels of resistance and towards that range high at 70,000. So if we do end up getting that break, we need to close above that prior high to, you know, break the pattern of establishing these lower highs here on the charts, right? The wicks included. So we need to see a break above $70,000 and 72,000. Seems a little bit far away to be talking about right now, but I talked about the full bearish case scenario, so let's talk about the full bullish case scenario. Okay, and that would be that trigger over there in terms of that bullish case. The same kind of trigger level as this $53,000 level is for that bearish case scenario. Alrighty guys, that is all the analysis that I have for you today. If you enjoyed the video or you learned something, don't forget to like and subscribe to the channel down below. And if you're after even more content, be sure to check out my free Telegram channel for daily updates as well as crypto and economic news. If you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trade setups with exact entry points, targets, and stop losses. And if you are a trader, don't forget to sign up down below to BitUnex to get 15% off all of your trading fees and $5,500 in sign-up rewards. Hope you guys have a really great week, and I'll see you next time. Bye.